The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your competence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be talking about building your daily watch list. This will be a shortened video, but we'll cover two specific areas today. And we're going to address the topic of markets that break out. And this helps to identify the best candidates each day in the session that you're trading, and also understanding that Monday, the opening range of the week, when the week starts, we start to expand the range. Markets open based on Friday's closing price, and Friday's closing price and high and low of the day, unless Friday's a holiday, of course, gives us our initial opportunities to identify instruments that could offer us a best trade setup opportunity. Now, this is my approach. The most important thing I try to focus on is choosing the right instruments. Now, often I narrow my focus down on the front side to indexes and gold metals, but I'm always looking for an opportunity on any instrument that offers a parabolic trade setup, whether that's a reversal or a trend trade. Monday, day one, the opening range is where we typically will look to establish a high and low as the new week begins. And for the purposes of this video, we'll focus on markets that have a daily close and breakout, and some of those may reflect a weekly close and breakout as well. We'll talk about those more in depth in a longer video. And markets that break out on the day. So obviously on Monday, day one, we could be breaking a Friday boundary or a Thursday boundary that is a higher low of a week, or any previous day's level that's a higher low of the week. But Friday establishes those initial boundaries. Now, we've talked about signal days, inside days, outside days on a Friday, a 3-day setup, a Thursday, Friday, Monday. We'll break that down in more depth in the longer video, but today we'll talk about markets that are closing in breakouts. We're going to focus on a Monday. Al Brooks, one of the expressions he always mentions is that markets are always trying to break out. Now, really understand, I'm looking for the setup, the pump and dump or the dump and pump opportunity on any instrument, the same setup on any instrument. So trying to figure out what an instrument's going to do is not my objective. I'm looking for the market that is offering me the easy money trading setup. The purpose of understanding when a market breaks out is that it can alert us, it can be a signal to alert us for a potential best trade candidate on the day in the session that we are trading. This is one way to filter out instruments on the day. Now, you can, as your skill set grows, you can grow your basket of instruments to sift through major currency pairs, major indexes, silver, gold, oil, maybe natural gas. Just a sizable enough basket that you can actually sift through that. It takes a matter of 15 minutes based on closing price or during the day itself to monitor if any markets have broken out, and is that breakout something that reflects a best trade candidate for either a trade, reversal trade opportunity, or if it's already closed in breakout, potentially a trend trade or reversal trade on the day. My goal is finding the pair that offers me the easy money trade setup. I'm not trying to be a rocket scientist, figuring out where a market's going to go or predict where it's going to go or anything else. I'm looking for the setup, the same setup, which we'll go into today. Now, in the playbook, we talk about this, pump and dumps, 3-day setups, the basic model for trade entry criteria. Now, traders are using this all the time, but they don't have setups, or they're getting chopped up before the market is in the right timing window. And so when you have the setup there, the basic model for trade entry criteria was a generic, non-subjective signal so that traders had confirmation. Once you see the setups and the repetition of pump and dump and pump templates, the basic model for trade entry criteria is a given. So it's understanding the best candidate for the pump and dump or dump and pump template, whether that's a 3-day setup, a 3-session setup, or if we, as the template evolves over the week, day 3 breakout traders in the market, first red day, first green day, and of course our signal days, inside days. Now Monday is day 1 and a new trading weekend is the opening range. The opening range establishes new boundaries for the new week, a new high and a new low. So from that initial Friday's closing price, the market begins to auction and expand the range. As we expand the range, potentially we may break one of these boundaries, high or low of the day level from Friday, and whether or not a market has closed in breakout. We may already have a market on our list that has closed in breakout, and now we're going to watch it in our session. So for example, we could have a trade set up in Asia. We come to the screen for the US session, but it's already moved in Asia. So that one's off our list. But we will look to see how the other markets have set up or if other candidates have broken out on the day. So some simple terms just for people to understand. CIB just means closed in breakout. That's closed outside of the previous day's high-low range. That can potentially alert us of an instrument that may set up on the day. When a market closes outside a previous day's range, it is now in breakout and is out of balance. Dalton, Mind Over Markets, we've talked about this before in previous videos. CIR, for the purposes of this video, will reflect a market that has stayed inside of a previous day's range. It might auction outside of the range, but it closes back inside of the range, inside of yesterday's high-low area. When a market closes inside a previous day's range, this generally indicates that the market is in balance. Dalton, Mind Over Markets. The example we'll look at first is Japanese yen. It closed in balance on the Friday and reversed after breaking out of the high of the week, the high of the previous high of week level on a Monday. So we've come to the screen, we identify a market that has broken out and potentially failed. And the signal is that we come to the screen and the yen has broken out. So we're trading the US session. This is an example of a pump and dump template. This is a recent example from this week for traders in the US session. This candidate would have come up on their list and an opportunity for the pump and dump on the Monday. No major red news on the schedule. Market pumping up, breaks out, reverses and coils. That coil heading into our New York Open session gave traders a parabolic collapse. So some traders may have been long holding this from London. They've taken profits, or maybe they haven't taken profits. And this market has coiled into the US session for an easy, no stress, parabolic reversal trade on a market on a Monday that has broken out, a pump and dump template. In this example, again, the Japanese yen, just for purposes of simplicity, we can look at multiple instruments, which the longer video will go into detail. And the PDFs will be in the course section area. I'm going to set up a separate folder strictly about building your watch list. The US yen Friday closed in breakout. So we have this on our list on a Monday. We come to the screen. We have the Japanese yen as a market that's closed in breakout. Now, it hasn't moved in the Asian session. It hasn't moved in the London session in terms of a template. So again, differentiating, just positioning yourself in a market versus identifying a template, a well-engineered pump and dump template or a dump and pump template. The signal is that the market has closed in breakout on the Friday. This market is coiling at closing price. 3 levels that I always work from: high of day, low of day, or high of week, low of week, and closing price. We're at the beginning of the week. The market has auctioned away. That's the initial range, our high-low range. It's pulled back and coiled sideways in a market that has closed in breakout. It has made higher highs on Friday. Higher high is a range expansion. Paul Tudor Jones, think of your, if a market's giving us an indication of a range expansion, do we have an opportunity to position ourselves if that market continues in the direction of that expansion? No major red news on the schedule. The market gave us a beautiful dump and pump coil into our US session open, a parabolic coil that is scalable in nature. We're at the beginning of the week. Scalability reflects your account size, and at the beginning of the week versus a potential backside 3-level collapse or vertical move, this would be a trade setup with a high degree of confidence that I would definitely scale into, reflecting that we are on the front side of the week. Monday's the opening range. We're just establishing now our new boundaries in a new week. So I want to just point out it's important that just because a market either breaks out or closes in breakout does not automatically mean there's going to be a playbook best trade setup. What time is it? What level am I at? Am I at one of the 3 levels? How is price behaving? Is there any major red news on the schedule? Do I have a well-engineered template on the day for either a pump and dump or a dump and pump opportunity? Another example, the British pound. We come to the screen. Thursday has closed in breakout, but Friday closes back inside of the range, back inside of Thursday's range. So we have a potential market that's given us a signal. It breaks out in the Asian window, but just prior to our Europe Open, pulls back inside and gives us the opportunity to position ourselves in a market that may now be on a reversal and possibly a range expansion. This is part of a larger 3-day template where Thursday has broken out, Friday has pulled back. Even though it's in range, the market has given us a false break and reversal and an opportunity for a parabolic expansion on the short side, a pump and dump opportunity. Pumping up, breaking out, and reversing and coiling into the Europe-London Open for an explosive range expansion trade on a pump and dump template. US index, a market that closed in breakout on the Friday and also was the high of the week. Friday was the high of the week. So we have higher highs, range expansion on the upside, but the market breaks out early in Asia and pushes higher, comes back inside, and comes back up one more time before breaking down in the first hour in our US window. So this is an example of where a market has moved earlier, no major red news on the calendar, but we have a well-engineered template for an opportunity to position ourselves prior to the New York session open. This is a pre-market trade, but a perfectly well-engineered example that could apply to any instrument. No major red news on the calendar. It's a Monday. There is no reason that I would not take this trade. If there was major red news 8:30 or 9:45 or 10 a.m., then I would be more hesitant to enter this opportunity or make sure that I was out of the market prior to news. You can also recognize the gap underneath where the market has broken out and closed, an easy low-hanging fruit potential parabolic opportunity. Where is the money? And if we just zoom in on that closer, we have a market that's pushing, and then reversing and engulfing. Again, once you have the understanding of what the templates look like, the universal entry criteria is just a clarification for traders when in reality you don't really need that. But a very clean, well-engineered pump and dump template in a market that closed in breakout and broke out again on the Monday, taking out the high of the week and reversing back down through closing price on the New York Open. Gold on a Monday, we had a market that closed in range but broke out early in the Asian session. This breakout is, again, an example of where the market has potentially given us an indication of a range expansion opportunity. It's broken out and reversed into the London session. They've pumped it up higher and started to break down and coil into our US Open window for the parabolic collapse. Closed in range, broke out. There's an indication that we may have a market now that could revisit that extreme. Breakout has pumped up and coiled, rolled over for the collapse through the low of the day and the current low of the week on a Monday. Pump and dump. Another example on gold where a market has closed in breakout. The market pumps up in the London session, the late Asia, early Europe London session, before breaking down lower low, pumping back up and coiling and breaking down in a pump and dump 3-session template in a market that closed in breakout. So when a market closes in breakout, we may have other time frame sellers at this point still driving this move, the pump and dump template. Another example on gold where the market is closed in breakout Hasn't broken any boundaries during the session, Asia-London session, before coiling and giving us a pump and dump nail and bail opportunity, an example of where the market has traded into the extreme and started to consolidate. So traders who haven't taken any money off the table into that New York Open, now we see the reversal. So an example of where traders taking the continuation trade and also traders taking the reversal trade in a market that closed in breakout at the low of the week, the current week and the previous week. An example on gold where the market has gone parabolic into our US session window before coiling sideways and reversing into 10 a.m. major red news on a Monday. An example, again, if you focus on closing price, of where the market has now established a new high-low range heading into our week, a range expansion on the upside. A range expansion on the upside. We've broken a previous day's high-low boundary. We did not have a market closing in breakout. It broke out on the day, coiled sideways before breaking down and reversing into the New York Open and blowing off on 10 a.m. major red news. A pump and dump template on a market that was an inside day on Friday's close. Inside day, we broke out during the day. So again, it comes up on our list. We've got a market that's broken out and it's working the high, lower low on the inside before pumping back up into our New York Open session, our New York Open, and engulfing and collapsing from high of day, high of week through the low of day level back into US session longs from the inside day on Friday. Another inside day example, this is the NASDAQ, and we have a market that breaks out early in our Asian window. It breaks the boundary before making a lower low of day level. So it's an inside day on Friday. We've broken the high of day level. It's broken the low of day level. We now have a market that is potentially giving us an indication of a range expansion opportunity. Range expansion, when a boundary gets broken, it may be giving us an indication of a continuation in that direction. Now, what type of template do we have on the day? How is price setting up? Well, this is clearly a pump and dump template heading into our US session window for the parabolic collapse into the New York Open and a reversal opportunity in a market that is now broken out on a Monday, day one, for the third hour reversal after blowing off in the direction of that range expansion. NASDAQ, Monday we break the Friday high of day level for the parabolic reversal collapse back down through the low of the day and to the low of Friday. No major red news on the schedule. A very well engineered pump and dump template which reverses from the high of day to the low of day level. Market that breaks out during the day, closed in range, broke out, pump and dump template for the reversal opportunity. Thursday closed in breakout. Friday pulled back inside of the range, but Thursday's close was the lowest close of the week. So Friday's just pulled back inside of that range and consolidated. We have a higher high at the end of the session. The market coils sideways on our Monday, setting up the dump and pump parabolic opportunity, blowing off back into the breakout level from the previous Thursday. Signal would be that Thursday was the close in breakout and the lowest close of the week. Traders may not have had this come up on their instrument, but if they're looking at the indexes or at this market, we see a peak formation low, the reversal, the close and breakout on Thursday. This market is still relatively in breakout short. That alerts us to that opportunity potentially. We coil sideways on top of closing price for the parabolic range reversal expansion on Monday. And no major red news Monday. Russell 2000. A pump and dump opportunity into our New York Open session. A beautiful, well-engineered pump and dump. Another example of the Russell 2000. It closed in breakout. Monday broke out again, as we saw similar on the Dow Jones, and then proceeded to break out into our U.S. window, lower low on the inside. The pump and dump coil into our New York Open, third hour collapse back through the low of our rectangle. So market that closed in breakout, it shows up on our list. It breaks out again, breaks down, and coils the collapse, the pump and dump template. We have a market that closed in breakout, Russell again, higher highs, the template building up into the open of the session for the parabolic collapse, pump and dump, 3 levels of rise for the coil sideways and the collapse, and then the 3rd hour reversal coming back at the low of the week, brand new week, Monday, opening range of the week for the parabolic range expansion reversal trade in the long direction. So 2 opportunities. Again, a coil for the parabolic collapse, then for reversal traders, the engulfment 3rd hour from low of week level for the reversal back through the high of the day. Another example on one of the US indexes, a market that closed in breakout on the Friday, proceeded to expand the range, a range expansion on the upside, potential indication of a market that could continue to go on a trend range expansion. What type of template do we have on the day? This is a dump and pump opportunity that coils into the high of day closing price level for the parabolic range expansion on a Monday, day 1, in a market that closed in breakout. A dump and pump template on a market that proceeds to go on a range expansion. This is a dump and pump opportunity that coils into the high of day closing price level for the parabolic range expansion on a Monday, day 1, in a market that closed in breakout. A dump and pump template on a market that proceeds to go on a range expansion. Currency pair, pound New Zealand, a market that closed in breakout on a Friday, an Asian session opportunity. The market proceeds to break out again and reverses, coiling and dropping back inside of the previous day's range. Coil sideways into the London Open for the continuation trade, taking out the low of day US session level from Friday night. Friday closed in breakout. Market attempts to break out again and reverses and fails. Coils sideways underneath of the high of day level into our London Open for the parabolic continuation trade in the London session. So this is just a primer on building your daily watch list. These can apply to most days, but most importantly, as you understand that as the week expands, the Monday is our opening range. Tuesday typically expands that range. Wednesday is the midpoint range of our week. Thursday is day 2 on the backside, and we can often see range reversals, and then of course our closing range of the week on Free Cash Friday. Most importantly is, what type of weekly template am I in? What type of daily template am I in? Do I have a best trade candidate? Which is why I talk about building your muscle memory. And it's important to understand the templates. And you may have an instrument that offers you a best trade candidate on Monday. We might have a gold. We might have Japanese yen on a Tuesday. We could have a midpoint range trade on the index on a day 3. We could have a monkey hammer opportunity on the backside on a day 2 on the range reversal. And of course, we could get a parabolic trend trade or reversal opportunity on the closing range of the week. It may just be a 3-session setup, high of week, reversal to low of day or to closing price, whatever that is. But we look for the best opportunity on the day in the session that you're trading on any instrument. And this is just a primer on how to potentially build your watch list. In the next video, we'll go more in depth. We'll build our weekly watch list template each day and look for where the best opportunities are. Markets that close in breakout, markets that break out on the day, a market that may already be in breakout at the close of a week, a weekly breakout, for either trend continuation or reversal trade opportunities. Markets that are in successive closes that are trending may offer us continuation trades that are parabolics. And of course, we have our signal days, inside day, outside day, day 0 template, and our 3-day setup opportunities. So in the next video, we'll expand upon this, traders. Stay safe, keep it simple, and may the markets go with you.